Hi everyone, this is Jay Harris coming to you still from Tom's Trading Room. In this video presentation, we're going to pick up where we left off from our candlestick rankers. We were in the candlestick dojis rankers, and we were on the list that we just completed and searched up for bullish patterns. Let's go to the candlestick stars this time. So we'll go back to stocks, rankers, and then click on the candlestick stars. When this page populates, you're going to see 4 different wizards, and we're looking for some bearish and bullish patterns that are 2-day in formation and 3-day in formation. As stated, when you have 4 or 5 dojis in a row, it's not as significant as if you have a 2 or a 3-day pattern. Now, whether the doji is a part of it or not doesn't necessarily make or break the pattern. It just means, for the most part, folks, a 1-day pattern isn't as strong as a 2-day pattern, and a 2-day is not as strong as a 3-day. So if you had to choose between the 1, 2, and 3-day patterns as to which ones you want to hang your hat on, you could say the 3 days are more significant, more telling, and more apt to reverse. But being that they are more significant, you'll also see that they're more significant because they're more rare. They don't happen as often. So keep that in mind when you're doing your searches. Real quick, you can click on the Candlestick Stars help page, open up another page that gives you some more information. Here's a link you can click on for more information on candlesticks. Down below, I wanted to show you what these patterns are looking for. Right now, the bearish patterns are the bearish kicker. To the right, the dark cloud cover. And one more to the right is the evening star. And the evening star is a 3-day pattern. The dark cloud cover is a 2-day. And the kicker is also a 2-day. Here's your bullish patterns, your bullish kicker, your piercing line, and your morning star. Now, the bearish patterns are more significant, more telling if they happen at support, and the bullish patterns are more significant, the bearish patterns more significant at resistance, bullish patterns more significant at support. The dark cloud cover information is here, the piercing line information, and then the morning and evening star information there. Let's go back to the search page. Let's make sure that we have it on pennies and weeklies. And we're on the 2-day bullish pattern. So let's click on search and see what we get. Same thing, the page will populate and it'll give you a certain number of candidates. And you can start from the top on down. So here's Walmart, International Paper, Healthcare Select, Yahoo, Goldman Sachs, etc. The 2 charts I want to show you for a comparison as to, how do you choose which one you want to do or which one you want to potentially trade. Let's show you Yahoo and Goldman Sachs. First, I'll show you Yahoo. If you click on the ticker, remember folks, you're going to go to the option chain. You don't want to do that. You want to click on the chart, and that will populate the chart here for you with all the controls where you can add more technical indicators. But right now, looky here, you have a bullish kicker pattern, a bearish day. The stock opens up with a gap pretty much in the same price area, and then it reverses the trend from what was previously down to the upside for that day. That's a bullish indication that prices may end up higher. Now, is it happening at a support? Well, here's a support where it reversed and ran up to about 45.5, retraced, popped 45.5 and retraced. So we have somewhat of a double bottom support action going on here. So this bullish kicker is happening at a support, you could say. Let's compare that to Goldman Sachs. If we click back to the list, click on the chart for GS, you have Goldman Sachs that's showing this bullish pattern at the end of a run or at a double or triple top scenario. So again, if this is a bullish pattern and we're looking for this to be a bullish reversal, if it's already at a top or already at resistance and it's to reverse, reverse means go the opposite direction, well then we would be looking for a pattern that signifies a bearish reversal or a bearish move to the downside, not a bullish pattern that you're seeing here. So the bullish pattern at resistance is not significant. It may continue higher, but there are other bullish continuation patterns as well. There are bearish continuation patterns. But if we're looking at these as bullish reversals, you want it to reverse from the previous trend. Well, a bullish means to the upside, so you want it reversing off of support or at the bottom of a trend, and this one is not. So if I had to choose between the Goldman Sachs bullish reversal that's happening at resistance, I'm not expecting it to reverse. I'm expecting it to continue, and I want to look for those kind of continuation patterns. Whereas Yahoo here is at a support, and if I'm looking at a bullish reversal, meaning a move to the upside, I want it to move to the upside off of support, and that's what's happening here with Yahoo. Now you want to factor in other considerations like, what's your potential upside move versus the risk in the trade, and do your risk to reward analysis and all. But that's for later discussion. Right now, I'm showing you again the bullish and bearish reversal patterns and how they're more significant as to where they're placed in the trend, along with the fact that the pattern has formed. So between Yahoo and Goldman Sachs, for just purely which one is the bullish reversal off support, Yahoo makes it, Goldman Sachs does not. Now, I'm not saying that's a recommendation to go trade this. I'm just showing you the comparison between the two and how to ascertain which is more significant because of where the bullish or bearish reversal happens within the trend on the chart. Hope you found that educational, helpful, and I look forward to more videos with you guys. Stay tuned. Bye now.